Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the on-chain risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, get access to this risk indicator. Let's go ahead and jump in. So, on-chain data is a very interesting way to track Bitcoin and to really follow what it's doing from a pretty unique perspective that you can't really do with other asset classes. And you've probably heard of a lot of different on-chain indicators or on-chain metrics, the Pure multiple, the MVRV score, the MVRV-Z score, obviously transaction fees. We've seen those spike several times throughout the years. The terminal price, the market cap to thermocap ratio, the miner cap to thermocap ratio, also supply and profit and loss, and the R HODL ratio or R HODL ratio, whatever you prefer. All sorts of indicators that you can look at. And to give you an idea of what, say, one of these indicators would look like, let's go check out the MVRV-Z score, right? So if we were to go over here and go all the way down on the website to the on-chain charts, you can just look around. Here's like the supply and profit and loss. But if we scroll down, you can see there's the Pure multiple. We mentioned that one as well. And if you keep going, eventually you'll find the MVRV-Z score. Now, this is a metric that you can see seems to be like a pretty good indicator for navigating, Bitcoin, right? Whenever it goes below zero, it tends to be a pretty good time to buy Bitcoin. When it goes above 6, it's usually at the peak of a mania phase. And, in between, it's sort of hit or miss, right? Like sometimes it'll go up to these levels and then go back down before going back up. And then other times it'll go up to these levels and just keep on going up. So you could argue that it's in a sort of a neutral state right now, right? Like it's not very low like it was at the end of 2022, but it's also not extremely high like it was in 2021 or near prior major market cycle tops, right? So it's kind of somewhat, you could argue it's neutral, right? It's somewhere in the neutral area. But you can normalize this between sort of the min and the max, create a risk metric for it, and if you were to do that, and let's go back over to the on-chain risk metric, right? If you were to do that for the MVRV-Z score, you get something that looks like this, right? And the current risk for the on-chain, for Bitcoin on-chain, it's around 0.5, right? Approximately 0.5 or so. For the MVRV-Z score risk, it's currently 0.472. The total on-chain risk is 0.516, but the MVRV-Z score risk is about 0.472. But what you'll notice is that it's, again, as we said, it's kind of in that neutral zone, right? Like it's not extremely heated like it was in 2021, 2017, 2013, and 2011, but it's also not really, really low either, right? It's kind of like still 2019-esque, right? It's like a little heated, still in quantitative tightening. One of the big reasons pushing Bitcoin higher, people just selling their alts for Bitcoin. Obviously, that's not the only way. You got institutions, you got the ETFs, right? I mean, you have other ways, but it's that, so that's just that phase of the cycle. And what's interesting is that last cycle, we didn't get out of this phase until after QE began, right after quantitative tightening was actually over and QE actually began. But you can create a risk metric for not just the MVRV-Z score, but also the Pure multiple and the MVRV risk and the miner cap to thermocap, transaction fee risk, market cap to thermocap, terminal price risk, R HODL ratio, supply and profit and loss. Now, these two we're not including in the risk metric, the last two. But if you look at the others, right, you can see there are 7 of them. You get all these lines. Now, we're going to just take an average of those lines, right? We're just going to look at the average of them, and you get a chart that looks like this. Okay? And so again, as I said, the on-chain risk would suggest that Bitcoin is sort of in like a neutral area. It's not, obviously there's the bulls and the bears, and obviously, both sides have their reasons to sort of think the way they think. But when you look at charts like this, right, I mean, it's very split, right? It's neutral. It's not, and it has been neutral for a while now, right? Like Bitcoin, anytime it goes up here to the 0.6 to 0.7 risk band, it cools off, right? And then it went back down here to the 0.3 to 0.4, and then it went back up to the 0.6, 0.7, and again, it cooled off once again. And so I would argue that if you're only looking at this risk metric and this risk metric alone, you're not looking at any other thing. You're not looking at social interest. You're not looking at like the price. You're not looking at any of the short term, any of the TA or moments. If you're just looking at this, it would suggest it's neutral right now. It's not extremely overheated like you've seen at major market cycle tops, but it's also not extremely low like you've seen near bottoms, right? It's kind of just somewhere in between. And that might be why there is so little interest right now. Like, I think a lot of people want, they crave more volatility, whether it's up or down, right? The volatility can often bring the market alive, and people return back. They return back to see it going parabolic, or they come back to watch the train wreck, right? If it's going down. But again, I think because it's been in this range for so long, a lot of people have just lost interest, primarily because while Bitcoin has been in this range, altcoins just keep bleeding back to it, right? And, that's kind of one of these parts of the cycle where it's really hard for people to get through because it's taking place over a longer time period, right? So this process we've seen here was a lot quicker in the last cycle because that was when the Fed sort of shifted monetary policy in the pre-halving year. This time it's much later in the cycle, and I feel like the on-chain risk sort of captures that similarity to sort of this period here, where it doesn't really go all the way up to these higher risk bands, and it could just simply be due to the fact that monetary policy just doesn't quite support it yet to go back up into the highest risk bands. It doesn't mean that it can't, it doesn't mean that it won't, it just hasn't yet, and I think that would be the most plausible explanation for it. But those are my thoughts on this on-chain risk metric. If you want to include the other two on-chain metrics that we mentioned, you can do that. You could just add it up, sort of include it in the overall total risk, and then you can see, if you look at it like that, current risk is 0.536. One of the cool things about how this on-chain risk metric is created is that you can also tailor it to what you might find more interesting. For instance, you could argue that something like transaction fees might not be the best on-chain risk indicator, right? Maybe it's not, especially, if certain launches can just send it sky high, maybe it's not the best one. And so if you don't believe in that one, or you just think it shouldn't be included, you can just turn it off and say, we'll just exclude that one, right? And see what it's doing there. And so that's one of the cool things that, about creating it this way, is it gives you flexibility, and it allows the user to basically figure out what they find important. If you don't want to come up with that yourself, I mean, we've just basically said these 7 do a pretty good job of providing a risk metric. But if you don't like one, let's say you just don't like the terminal price risk metric, but you still feel like it should be in there, maybe you just don't want to weight it as much, you could just turn it down to 0.5 and say, well, we're going to weight it a little bit less than the others. But anyways, guys, that's the on-chain risk metric that we have on the Into the Cryptoverse website. Make sure you guys check it out. Sales going on, lock and low rate, and I will see you guys next time. Bye.